Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. Nick Santiago, President and CEO in the Money Stocks, with me now. Nick, thanks for coming back on the show.
Great to be back, Michael. Happy New Year.
All right, Happy New Year to you too. Okay, you want to start off today with the Euro-US FX contract, right?
Yeah, I wanted to start off with the Euro today. I think traders should be aware of the pattern that was recently made on that chart. If you take a look at the Euro chart and you just go back basically to last week, what you're going to notice is that we had a nice little inverse head and shoulder pattern that was in play, and that pattern has now failed. And traders should now watch for this Euro, at least in the short term, to come back down and trade into that 128 level. I think 128, it might even be 129 short-term support. You have a nice 200-day moving average around the 128 level. I think the Euro will go down and test that area now.
Okay, got that. What about the EUO Pro shares?
Yeah, the EUO is a way to play it for traders that don't have a Forex account. What you could do here is buy the EUO, possibly into first target of $20, and then all the way up to the 2050 level. I think you should get a nice little move into there. In fact, you could even see the EUO now is just forming a little bit of a base, but has come off the lows nicely. So the EUO is a way of shorting the Euro if you don't have a Forex account.
Okay, got it. All right. Now, the J.P. Morgan has been your guide for a lot of things, not just the banking industry. What do you say there?
It's been my guide really for this market because the financials have been one of the strongest sectors really since this QE3 nonsense began in June. If you notice, the market bottomed out in June. That was when JPM bottomed out. JPM has been on a tear to the upside, and even though there's been pullbacks in here, there's still technically really nothing wrong with this stock at the moment. The one thing I will say, though, is it is starting to get a little bit long in the tooth. You're going to come into real good resistance levels around the $46, $48, and $50 areas. I think it probably needs to pull back soon, but as long as JPM is still holding up and there's really no breakdown, this market ultimately holds up. And that's what I think traders need to do, is focus on this one as a gauge to tell you exactly what the overall stock indexes are going to do.
Okay, well, they had some real highs that we have to get over. I think it was February of 11, and we're real close to those. You know, that's almost a triple top here if we don't follow through to the upside. What's your thoughts? You think we're going to bust through this possible triple top?
I don't think it gets through there that easily. I think this thing needs to pull back first and recalibrate. If JPM comes back down to the $41 area, it would be much, much more healthy for that stock and for the overall stock market.
Got it. All right, GLD.
Yeah, I've been on your show, I guess a few weeks back now since we had a little bit of a holiday break, but I was warning everybody about gold, saying it's not ready yet to break out, and this looks vulnerable to the downside. And I think there's still more downside in gold. I think traders should continue to look for a little bit lower levels. If you're looking at the GLD, around the 156, 155 level, that's where you start to look for a potential pattern. Before that, I think gold wants to go a little bit lower. Okay.
All right. Give us the equivalent in gold prices.
Yeah, if you're looking at gold futures, basically what you're going to look for is a potential level down to around the 1620 and potentially 1600 area. Ultimately, I don't see gold really breaking much below 1580, but it can test that.
Okay, in that case, are you thinking that that's a really strong support here, or it's just another place to short it for a longer move?
No, I would be a buyer of gold around that 1580 level.
Okay, got it. All right, now you brought up a different stock. We've been talking about the real estate market for quite a while. TOL.
Yeah, I wanted to bring up Toll Brothers because it's a housing play, and they ultimately cater to the higher end or the more wealthier consumer. So just think about it. These guys are building McMansions and these big homes. This is a stock that everybody should follow. If this stock starts to falter, it's telling you that, we have a correction probably in the making. Right now, the stock is holding up pretty well. I do think there's a lot of resistance at the current level at 34.30, but more so to use this stock as an indicator because the housing stocks have been the strongest sector since October of 2011. So, again, if this sector goes into a corrective mode, this is going to bring the entire stock market down. The Federal Reserve is out there buying mortgage-backed securities to the tune of $45 billion a month. So traders now need to watch this. It has also made a series of lower peaks since September 21st, and that should be noted as well. But ultimately, I do think the housing stocks, with a nice correction, especially Toll Brothers, if it traded down to the 27 level, would be a buying opportunity.
Okay, but the thing that I'm looking at right now is today it broke out over that December high, early in December, and it's got looks like a real strong move. So are you saying that if we don't pull back from here, that this thing could continue in this direction?
Well, if the overall markets move higher, this can continue higher. But right now you're contending with, even though you got above that December peak, if you just go back a little bit and you look at late October, what you're going to see is right on October 25th, you had a high volume decline. Prices now into that level. I think there's still a lot of distribution right there at that area. So I'm not thinking, even though this is breaking, looks like it's breaking out today, it is breaking above the December top, but it's going right into that October 25th sell-off, and I think there are a lot of sellers still at that level.
Okay, what price is that, like about 36-ish?
Yeah, right. No, actually, right. Anywhere from where it is right now all the way up to 36, correct.
Okay, all right, got it. All right, LEN.
Yep, Lennar is another one. Lennar is another housing stock that has been a major leader. In fact, a fair case could be made that this is stronger than Toll Brothers. Now, this has a beautiful weekly chart to it, so traders want to watch this one on a correction or any pullback. You could be a buyer of this one as well. But Lennar has a really nice long base, I guess going back to September 2012, if you take a look at that weekly chart in an uptrend and starting to break out there. So this is another one. I wouldn't jump on board today, but if it got down to around 36, I'd probably be all over this one.
Okay, got it. All right, let's talk about your general outlook here for this S&P market, where we are now, what your thoughts are.
Well, right now, a fair case can be made. The market's moved up off that fiscal cliff news with very, very good volume. But the S&P still has not taken out the October or the September peaks. It did make a new closing high on Friday, but we never took out the high peaks made right after Ben Bernanke's announcement of QE3. So I think there's a lot of resistance here still. I think traders still need to be very, very cautious. 2013 is going to be a very, very turbulent year. The month of January is always very tricky, at least for me it is. And we often will see a pivotal month in January. So I think traders right now, even though the markets are riding high on this fiscal cliff euphoria, I think you got to be a little bit cautious here. Watch for pattern. If pattern sets up, then you could own this market long. If pattern breaks basically below the 145 and a quarter level on the SPY, I think this market could be shorted. Let me just give you that level as well on the S&P 500 cash index. It would probably be around the 1440 area. Any close below there, this market is going to go into severe correction.
Okay, all right. Now, we've got a few minutes left. Let's slow down a little bit, and why don't you tell our audience about what happens in the trading rooms? What goes on in there, and maybe some of the trades you've recently played or traded? Yeah,
well, you come over to our trading room, and you'll see our screens live, and you'll hear all of our commentary live as it takes place. But it's predominantly a scalping room. We will do swing trading in there as well. But just today, just to give you a few trades, in the morning we had Illumina, we had Vivus, we had Boeing was another one. We had an Apple trade, all winners today. So, I mean, those are just four that I just named off the bat. But each and every day we continue to scalp this market in the morning between 9:30 and 4 o'clock.
Okay, now is it just equities, or are you trading indices, or give us the?
Well, we'll trade the S&P 500 E-mini futures. We'll also trade ETFs. We'll also trade a host of different stocks. And my partner Gareth, which I believe you met a couple of weeks ago, he will also trade the small caps. So there's something for everybody in that room.
Okay. Now, you mentioned Apple. You traded it today. I'm looking at it. It's got a kind of a bottoming action, it looks like to me. What's your thoughts there?
Well, as I've said to you on your show prior, I said as long as Apple holds above that $500 level on a closing basis, it can still trade higher. I think ultimately Apple's upside is very, very limited, though, maybe to the 575 level. I really don't see that stock having the muscle right now to get much above that area. I think at that level, traders could look to actually swing short this stock. But it's a great day trading stock right now. There's no real setup to own this thing on the long side, in my opinion. You know, you could hold it maybe with a stop on the long side right now, maybe to a play to 575, like I said earlier, with a stop below the low of 509. But that's about it. I mean, there's really not much there, but it has turned into one of the best day trading stocks in the world right now.
Good. All right. Before we go, one more time, tell our audience how to get in touch with you and get in that room.
Yeah, come on over to InTheMoneyStocks.com. Punch up our intraday stock chat. You'll see the tab there. Take a 7-day free trial. Also, check out our research center. You'll get all of our nightly setups, all of our nightly videos, and you'll also get all of my proprietary cycle work.
Thank you, Todd. Excuse me. Thank you, Nick.
Thank you, Michael. Have a great day.
You too. Nick Santiago, President and CEO of In the Money Stocks. Up next, Todd Schoenberger, Managing Partner, Land Colt Capital. We'll be right back with Todd Schoenberger.